somebody comes to you and they're saying, hey, Alan, I have this great business. It's off market, but like walk me through which loan I should be getting, why I should be getting it, and like what the state of the market looks like right now.
SBA, the 7A program is really what I do, right? And the difference in the programs is the use of proceeds and like what it's designed to do. My next piece of advice is be friendly. People too often I talk to think this is a game of spreadsheets. The business should do something to your gut, okay?
Welcome back to Jackquisitions. We have Alan from First Internet Bank, the ultimate lender in SBA. I mean, Alan's awesome. He's a good friend. He is an amazing SBA lender. Alan, what's going on?
Hey, thanks, Jack. Not much. I'm coming to you live from Fishers, Indiana, where the bank is headquartered. We had some leadership meetings, and it was great to be with my credit team in person because we work all over the country, remote.
Yeah.
And I'll be honest, like shout outs to my underwriters. Most of them look like their headshots in the email. So that was cool. There's a couple wild cards, I think my headshot, I'm clean shaven. I still wear eyeglasses and I'm wearing my chameleon suit. So I'm kind of guilty of the old headshot thing too, but no, it's been great.
Alan, I don't know a ton about bankers or the banking industry in general, but I was extremely surprised. I assumed it was like the CPA industry or the accountant industry, is that you guys would be a bunch of very generally straight business people. But when I hung out with a big group of your colleagues in Dallas for SM Bash, and I had just an absolutely wonderful time. You guys are a hoot.
Yeah, you had a good lineup. I was kind of jealous because I know that Austin Porter and Jared Johnson, Ryan Kroge, and Sam Krause, like those are all. We're all friends in real life. And it's interesting. A lot of people don't realize that a lot of the, the big producers in our space across different banks, we all know each other, right? And that's kind of the benefit of, hey, if it's not a fit for me, maybe it's a fit for you. And they're in good hands because we know, the level of experience that the people have. But it's a cool community. And to your point, that's our corporate culture, I guess.
Well, I mean, you guys started as an internet bank. So, I mean, the ability to come together and actually be social, I would assume it goes quite a long distance.
Yeah, it does.
But, Alan, I mean, you are our SBA guy. I mean, I just got off a call with you last week or a week and a half ago about we are in the middle of trying to get closed on a deal, and we ran it through you guys because you guys are the group. But in terms for people who are listening who maybe haven't gone through the SBA 7A, the SBA 504, the SBA Express, all of the SBA subcategories, I just wanted to kind of step back. And last time we hit it really hard on like, hey, how do you not get around, but like, how do you deal?
There's a little getting around there, Jack. Let's not lie to the listeners here.
How do you deal? How do you manage the roadblocks that you're going to run into?
That's a better way. How do we navigate these challenges in the new landscape, right?
Opportunities.
Opportunities.
That's my favorite corporate speak is when there's a problem, it's really just an opportunity.
Yeah.
No,
synergy,
it's a problem, Sarah.
what other? Alignment.
Alignment's a good one too. But so like taking a full step back into somebody who's maybe just getting into this, I mean, somebody comes to you and they're saying, hey, Alan, I have this great business. It's off market. I have this much money saved up. Like, I'm pretty sure I'm good on the basics of what I need to close on this deal. But like walk me through which loan I should be getting, why I should be getting it, and like what the state of the market looks like right now.
Yeah, that's great subject matter, and I think it's important, right? That's sort of what we pride ourselves on in my group is largely that we're not as broker driven as other groups. So, we can truly be objective and an advocate for the buy side because if, let's just be really transparent here. When the business broker has a listing, I pre-qualify deals for them too. I deal with some pretty good brokers, but they want to corral you to work with their person because they're making a commission for the referral. The commission they're making for the sale is one piece of the puzzle, but they do get a referral fee for making an introduction. I just bring this up because that's where we start as the beginning, right? And we like to, when you're looking at different deals, here's always my advice. One, the business should do something to your gut, okay? This is more than spreadsheets. If, you find a sim that says a seller works more than 20 hours a week, please forward it my way. I'd like to see it, right? They're making $1 million and he's
The
not even
wife
working. Yeah.
just gets paid.
It just gets paid.
And they live in the Bahamas.
Yeah, and he's
the
selling,
typical.
it's a roofing company for sale right after a hurricane season. The seller's 45, but I'm telling you, that cash flow is predictable and consistent. You know what I mean? So
exactly.
I run into that, right? But, what I would say is you have that gut thing, right? You feel like something about this business is compelling to you. I do a lot of home services. That's no secret, right? That's really where I play. But I've done all sorts of industries. And the idea is it should be something where the listing feels compelling and you feel like your strengths can contribute to the growth of that company, right? You want to make sure that makes sense. The next thing, obviously, is send it my way or whomever, right, to get eyes on it. Now, there are some brokers, and I understand why. There's a lot of tire kickers in the space, right? So they want to know that you're legit. And I think that we talked about the buyer prequalification on the last listen, but in case someone missed it, I offer those, so I can give you a letter of bank support. So the sell side knows you're serious, you're engaged, you're qualified, and the bank's ready to do business with you when you find the right deal. So I call them a hunting license a lot, that's sort of where we start. And then from there, we start looking at deals, and brokers often won't release tax returns until you're under LOI. And this is important, right? Because SBA loans, the 7A program, it needs to be underwritten to the business tax returns, right? So, and we can do a trust then verify review up front using, company prepared financials. They don't even CPA audited. I'm happy to put a term sheet out to show, hey, we're getting into action, because our good faith deposit, Jack, it's totally refundable. So like if we're going through the bank process and you get back a quality of earnings and it's not favorable and you're like, hey, I don't want to move forward. Well, good. I don't want you to move forward either. We're not in the business
it's not good for us either.
We're not in the business like keeping deposits, right? So that's kind of where we start, right? It's the pre-qualification and then looking at the deal, talking through the deal, making sure, there's not a whole lot of like a concentration risk why are they only making money in 1 year, right? And now they want to sell, right? So once we get through that objectiveness and we work together, we determine the deal's got legs. My next piece of advice is be friendly, be real, be a human being. That's what you have as a buyer, as an independent buyer, Jack. Because, dude, I make the joke too often, but the culture thing, the ultimate, like, people too often I talk to think this is a game of spreadsheets, and that's challenging. What I like about your audience and the people that I've been lucky enough to be kind of working with that we've met through you guys, it's great because they kind of get it at a higher level because they're listening to people that like yourselves, like that are really in the trenches, right? So they're interested, they're thinking about things proactively. There's some people I deal with that they just say the word trailing 12 STE over and over again, and they've never done anything. They're not worried about transition and ownership. This is a lot different than a double block. This isn't a house hack play. This is a real responsibility and transition and operations.
There's a lot more moving parts.
Dude, there's so much. And
I do want to bring something up
Please.
that you said, because there's a giant caveat is, yes, be extremely friendly with the understanding that the sell side isn't your friend.
Well, I mean, that's.
I mean, you're a nice guy, Alan, so you probably are friends with everybody.
Wow.
But one of my big caveats when I walk people through these is a lot of people get really sold because the sellers are nice people. They're people. The buyers are nice people. They become friends. They want to be in the same industry. But at the end of the day, there's a few things. Is all of their incentives are technically adverse to your incentives.
Thank you.
And so, right, if they're hiding or they're even not hiding, but they're mismanaging or their opportunities.
Roadblocks.
Their roadblocks. Their misstatement of facts about their roadblocks or their expenses, if you're buying it based on a multiple 3x multiple, and that's 10,000. It comes out like you're paying them 30,000 for something that is non-existent.
That's it.
So
Yeah.
every dollar is in the inverse. Not to mention, there's a lot of hard conversations that need to happen. There's a lot of hard conversations. If you listen on this series, we talked to Chris Barr, who's in the middle of some of these hard conversations with his current buyers or his current sellers as the buyer. And he's like, yeah, I mean, if I didn't like him, I might have killed the deal already. You know, maybe you should.
Right. Well,
If you're saying that, like, you can't keep a deal alive because you like somebody. You need to keep the deal alive because it's right for you and it's a good business and it's a good purchase price and it works, right? Because you're tying your life to it. So, yes, I agree. I've been friendly with every single one of my sellers. Very, very,
well,
very
that's just so
friendly.
you get under LOI, Jack. You know, that's when we start playing ball.
And then Mean Jack comes out.
Yeah. Like, it's like I told you, you and I were looking at a deal, and it was not a Jack wins. You're walking, and you don't care, right? And like that's what I tell all my people to be really charming. Let's get in there. And then I work for you. I work for the buy side, right? I'm a W-2 employee of FIB, right? First Internet Bank, but I represent the best interest of the buyer, the person who's putting down their personal guarantee. And to your point, man, I get frustrated when sometimes the buyer is like you're saying, right? Oh, the seller is a great guy, man. You know, it's like he might be, but are you going to pay 3x on his kid's Disney World vacation? Like, does that make sense? Like, is it, you know, that's expensive enough, bro. You know what I mean? I know I got two daughters, right? And I know you can relate there, but it's like, how are you going to do?
I see the expense to cruise.
Justifying.
Yeah.
Right. Yeah. It's crazy. And I am with you. I always say like stand out in the LOI process. And then once the hook is set, that's when we really need to figure things out because you're protected under, you know, financial contingencies, right? Financial due diligence period. And all those things can uncover some really good reasons why maybe that LOI offer isn't really what we want to come in with, and maybe something like this is more. Now, I'm not talking about wasting time, okay? I'm saying that if a deal is grossly overpriced, in my view, they're not gonna come down $1 million, right? They're so off base that sometimes it doesn't matter. But you know, if you're gonna deal with some stuff, then I always say, you know, get in there as you can, and then that's when we start playing defense, in my view.
And so, when you're working with your average buyer, so there is a few different types of SBA, right? So they're coming to you, they're actually thinking about going the SBA process, and you know what is distinguishing people into each category, just so they know what to research as they're kind of coming to you with what to expect.
Yeah, that's a good topic. So SBA, the 7A program, is really what I do, right? And the difference in the programs is the use of proceeds and like what it's designed to do. So on all the deals that I'll do, it'll be an SBA 7A term loan for the acquisition of the business, right? Then we'll add an SBA Express that's up to $500,000 or below, right? Depending on the use of proceeds. It's an express loan and it's for working capital. And we structure ours as a line of credit. So we'll do the 7A loan, right, to buy the business, the Express line of credit, right, to give you working capital or deferred CapEx or, you know, things that you don't need to spend money on in the first 90 days should be on a line, right? You should be paying for something you're not using right away. But then the 504 program is really compelling too. You know, I've done plenty of them in my time, and they're used for real estate. And to keep it in more simple terms, like heavy equipment, right? Like real machinery. Manufacturing has some opportunity to play there, but it's definitely something that is attractive, and you can combine them. You can do a 504 for the building and a 7A for the goodwill, and then throw the Express on for working capital, and then you got all three. The difference with us, though, is, you know, as we are a preferred lender, we have the delegated authority of the SBA. So what that means is we don't outsource anything. I don't take your loan, have it completed, have it approved, and then send it off to you know, the local office or wherever and hope for the best, right? They call them screen outs when you have to go that way. When you're a preferred lender, that's great for 7A and Express, but 504, you still have two pieces to the puzzle. It's, you have the CDC, so they represent the SBA itself essentially, and the bank. And it's a combination of a conventional note and then really a debenture. Without getting too sophisticated, you need two approvals. And sometimes for that reason, the opinion is it can take longer. But like anything, if you just stay proactive, I've had great experiences, doing 504s. That being said, I mean, I do 99% 7A, because I'm doing so many acquisitions. Very rarely is it a big portion of real estate. And I can do a blended term with a 7A anyway and get you to 15 years, get you to 25 years if it's 51% or more, and keep it a little cleaner, keep it an easier process. And some people, believe it or not, they lean into that piece. They want one closing date and know when they're getting the keys to the castle. And it's hard. There's some variables when you're dealing with third parties, as you might, it makes sense.
Yeah, so correct me if I'm wrong, what I heard is the 504 is a great option for real estate.
Oh, yeah.
That being said, there is additional approvals that may make it take longer. Internet says, when I remember researching this years ago, 30 days to 60 days longer.
Yeah.
Is that probably pretty accurate?
That's been my experience with using them. Quite honestly, it's been that long, and they can be challenging too, right? Because they have sometimes different credit parameters than even the bank, right? Where we can do that. And, for real estate, I do like it, but if you're an existing operator, I also kind of like considering the leverage of the 7A because you can go zero down. You can't go zero down with 504, right? You need to put 10 down, in some cases 20. So at that point, now it's determining overall cost of capital versus cash and cash return. And that's a personal decision.
Yeah. And then if you can do a real estate purchase with the 7A, as long as it's with a business that you're owner occupying, correct?
That's correct.
And then, but the one downside is that it is considered a point or two higher so you pay a little bit more, but on the backside, you also get to amortize or have lower cash flow payments on the blended business plus building,
and it's one play, right? Like you're signing one set of loan docs, and you get the business, you get the working capital, you get the building, all on the same day, And a lot of folks honestly lean into that. And again, I mean, it's all about the leverage, because the 504 does have some other benefits. Generally it can be a fixed term, and some folks like that element of it. But in this, I don't have a crystal ball, and I wouldn't dare make a guess on rates, but I'm hopeful they don't go up. If anything, I'm feeling they might go down. But I'm optimistic to a fault, I guess. It is what it is. We'll see.
Me too. I'm very hopeful, considering my rate moves as well.
Yeah, well, right. Yeah, you and a lot of business owners in America are hoping.
I have a funny story for you. So I was talking to a lender the other day about something completely different. And they were trying to convince me, Alan, I shit you not, this lender, SBA lender, by the way, as well, was trying to convince me she was absolutely flabbergasted that my loan was a variable rate. And I said, I deal with a lot of people in industry in this kind of ecosphere. There's a lot of variable rate loans. Like mine's not, that's a norm.
Yeah.
It can be a norm. I mean, they do. I would say I'd be more surprised to have somebody who has a fixed rate loan. Is that pretty accurate, or am I off here?
No, you're totally on point. The folks that do offer like fixed rates in 7A, it's out there, but it's really squeaky clean paper. I mean, I would say that my question to her would be, have you closed $65 million year to date as of July 1st? On your fixed rate loans? Because I know I sure am on variable rate loans.
Yeah, and that's the thing is, at the end of the day, because her and I kind of got in an argument about it, in a nice building. It's no, I'm pretty sure that if you were to look at the majority of all SBA loans, most are variable. She's like, no, there's no way.
Yeah.
Going, yeah, they are. I mean, I know I'm just an HVAC plumber guy.
Yeah.
But I kind of feel like I got you on this one here, miss.
And you're absolutely correct. And that's the vast majority. I mean,
you can pull SBA loans loan data. Like we
Yeah.
can pull a spreadsheet and see
Right.
anybody who's won a loan in the last like 6 months, and I can see their rates and what they
Right.
bought on and everything.
Right. Yeah.
So
That's an interesting take. But not everybody that does what either of what you or I do, not everybody's the same, right? So it is what it is.
I guess if you just close 1 or 2 a year, then you can say that.
Yeah, well, you can
but,
go fix if you've got like 2x cash flow 3 years in a row and 20% down. If that's what you're looking for, I don't know that I want to waste too much time either, right? If you want to go and do that's great. It's just not common. None of the players for certain are doing that. Like the folks that are actually getting.
That's what I mean.
Yeah, real biz acts like over $1 million aren't playing in that space in my experience at all. So.
Sweet. And so definitely, I mean, I went 7A. I know many others who've gone 7A. It's a great opportunity to build wealth and generational wealth.
Yeah.
And with that, I mean, you are at somewhat the forefront. My mouth is dry. But you're at the front of the market here, seeing everything that's going on. What is the market look like right now, just from like buyer's market, seller's market? What's transacting? How fast is it going? Like, can you give us some data on that, or at least feeling?
No, absolutely. I mean, we remain busy, right? Like, we haven't really felt much of a slowdown. I have had some partners that, like brokers and stuff, that have shared with me that it's just getting a little tougher out there. I've seen some of their deal quality decreasing, honestly, like very often. But in the same breath, I mean, I've seen 2 instances right now of people that have successfully sourced off-market deals, have successfully got the seller actually engaged in understanding they need to provide documents, right? Like the challenge with off-market, there's like the excitement about it, I get it, right? But I've got 2 that are like under LOI, agreeable terms, like really nice cash flow, good price for the seller. I have two folks that were able to kind of pull it off going on right now. Now, I'm not suggesting the new wave is off-market deal flow. Everyone's been trying to do off-market deal flow forever. I mean, I get it.
What?
Yeah.
What I have to ask, was it home service industries?
It's one of your listeners is one of them actually, and
that's incredible.
Yeah.
Congrats to I hope that person's listening to this one too.
Yeah, I'm not
That's
saying
incredible.
that would be inappropriate, but I mean, I told him on our Zoom, I'm like, dude, you did what? Right, and he's like going through how he went about it, and which I can't share on this. That's his IP.
It's all proprietary.
Yeah, right. But I literally go, I'm like, he's like, yeah, like I'm like, I don't think you understand. Like this is awesome. And the other one was actually, it was a friend of he found the deal. It was like a friend of a friend. This one was not home services. And this is kind of a different industry altogether, but it was somebody's friend's dad. Somebody was looking to retire, and this guy was looking to buy a business. They got together and it made sense. So those two are going. The other one is a home service business. So, I mean, that's unique for my pipeline, really, because in my experience, I'll be honest with you, like the off-market stuff, it has a tendency to stall out, Jack. It just does. This seller gets fatigued. You don't have a broker herding them along, and very often they don't really want to sell. Like they're entertaining the idea.
They like the idea.
Yeah, they like the idea, and they're not committed to selling. So they get cold feet, and then all of a sudden they can't provide you what you need, and then you're out of the time of exclusivity, and they just move on. It is what it is. But I'm happy to report I got 2 cooking now without it, so that's been exciting. E-commerce, I've been seeing a bunch of, I don't touch it anyway, but there has been a lot of inquiries on that I've just been kind of passing on. There's a lot of, Amazon stores that source stuff from China. I don't know why people want to buy those businesses, but, maybe there's a good reason. Likely it's something I don't understand. But it's just, to me, it's too much risk between tariffs, supply chain, and then, the almighty Jeff Bezos, he flips a switch and gets in his helicopter, you're out of business. So
or decides to use your data and compete against you. I've heard of those horror stories too. Like,
that's the other thing.
I sell batteries, and then it's like, oh well, now Amazon also sells batteries, and
and I sell batteries now. It does a lot of other stuff, right? And it just it's challenging.
So this brings up a really interesting point. I know there's a bunch of these industries that I just have no idea about, and so one of our listeners, who's a good friend of mine now, he was telling me that he's in the car wash industry, and specifically like the chem side, and he has some amazing IP, and he came up with some proprietary formulas, and he took like a year and a half, Alan, to create these formulas. And I'm just like over here, I bought 3 businesses. I'm like growing and hustling every day. I'm like, what are you doing just working on formulas? Like, you're just screwing around.
Yeah.
That's what you're doing. You're
Yeah.
not. But he came up, I guess, with some amazing proprietary formula. And one of the key leaders in their industry offered him, he's done, I think I can say these numbers because I'm not telling you anything
Right.
that, specifically about him or the business. But he got an offer. His business has done $300,000, Alan. That's it. $300,000 in 6 months of operating. Top line, not even net, top line.
Oh.
Offer on this business though, $2 million. I'm sitting here going, what the hell,
You
man?
should have been working on formulas, man.
I know, I should have been working on formulas. Freaking chemist, man, smarter than me. But I was blown away by like how far some of this IP and like specific proprietary
Oh yeah.
stuff, how much value is actually in that, which is just crazy to me because I'm over here in like, we're in a pure EBITDA world.
Right.
There's no proprietary nothing unless
Yeah.
you can figure some weird new AC system out.
Yeah. It's
Do you get anything like that comes along that you're just blown away by?
I got a deal, and it's the weirdest one, not the weirdest one, but it's one of the most interesting ones recently. I gotta pick my words there, and it's a roadblock. We're not a workaround. No, it's what they do is they actually provide, and people probably know about this industry. I'm probably just a layman, but what they do is they actually provide the mobile service for large festivals in remote areas to make sure that there's cell phone service and Wi-Fi access, and they actually charge sponsorship. So like if you go to a trade show and it's like Wi-Fi is Alan FIB, right? Like I would pay them for those rights, and then they would split that with the sponsorship. I just thought it was a kind of an interesting thing because that's something that you use and you don't necessarily think about it. It reminds me of not to name drop it, our friend like Rand Larson, right? We had lunch.
Yeah.
We had the opportunity to have lunch one of the times he was in Tampa. We had this very similar conversation, and he brought up a business that I thought was really cool. It was mobile lice removal. Okay, so when there's a lice outbreak in like a public school, bro,
I'd kill it. I do amazing at this business. Hey, I don't have to worry about nothing. I just shave the mustache and I'm good to go.
Well, you got a beard this time again. I mean, dude, your mustache only a couple weeks ago, but it is what it is. I like the stash personally, but we'll take it. But this business, right? These guys, this is a really interesting niche, and I've heard of it, before. I think Jared actually funded one, but it was just like I was like, what the heck? And they're making money, man. Like there's a lot of weird little like, what problem are you solving that people aren't
thinking? Could you imagine being in that business though, Alan, and just like having to? I mean, we have to be the bear, like the harbingers of bad weather. Yeah. Like they have to be wanting for lice outbreaks in schools.
Yeah.
And I'm like,
I could never do it. It freaks me, kind of grosses me out, right?
You like you said yourself though, as like a dad of daughters, daughters, I don't know what I would do. I'd probably call a lice person and be like, hey, here's $200, just fix it.
Well, you get Mrs. Gimbel in the school nurse, or I think that was my school nurse's name. Shout out to Mrs. Gimbel if she's still around. But the idea would be the idea is, that's your best lead source, right? So you're just going around the schools. You're taking the Mrs. Gimbels of the world out to lunch. Like, hey, you got any bugs? Like, what's going on? Like,
your B2B is school nurses, which are the most underappreciated school faculty there is.
Yeah, you're not kidding.
Oh my gosh.
You're not kidding. Yeah, that's an interesting business. But yeah, we see all kinds of different things, and at the end of the day, it's like, okay, if we've got a smart person, a good story, and sustainable, predictable cash flow. As predictable as we can be. All right, I'm not but consistency certainly matters, right? As far as past performance does have something to do with future expectations, right? If we get those three things, though, the cash flow, the story, and a smart person, then I'm good. I'll talk about any industry. You know what I mean? Like that's something that, with the exception, we're not big on like freight and trucking. Okay, that's just not a good space for us. We're not really heavy on, there's a couple of franchises we're not really touching right now for a variety of reasons. But other than that, I mean, we're industry agnostic, and that's a lot of fun because I get to date a lot of industries without marrying any of them, right? I could kind of just look under the hood and go, whoa, that's wild that these guys do that. Or sometimes I think the industries do a lot better than ultimately that they do. You know what I mean? So that's kind of the other side of that coin, of course.
Probably one of the most important decisions you can make in your ETA journey is which SBA lender you are going to pick. A lender who will be in your corner to get you closed on the deal, as well as set you up for future expansion. That is why we partnered with Alan Peterson from First Internet Bank. He and his team take a how can we approach, as well as I personally know they specialize in home service acquisitions. Mention the show or my handsome bald head and receive a reduced good faith deposit, as well as a detailed deal review and maybe even a buy-side pre-qualification. No strings attached. Head on over to alanfib.com, that's ALANFIB.com, or click the link below to get connected.
Yeah, I mean, but overall, industry agnostic, the SBA program.
Oh, yeah.
Because I know that, like, what I know a lot of people were worried about circa June 1st.
Yeah.
Or June 8th or whenever the big switch was with that.
Yeah.
There was a lot that came out, and there was a lot of people worried that this was really going to slow down the SBA process. But it sounds to me like things are mostly status quo.
I mean, at a risk of sounding disingenuous, I think it's been good. What I've seen with it is that the folks that we're dealing with, that we're working with closely, are more serious. And then what that does is it also triggers less tire kickers for brokers. It makes sellers get a little bit back to reality. You know, it's for me,
Stabilizes the market.
Stabilizes the market.
And so I love this because I went on Rand's podcast.
Yeah.
I don't know when he's coming out with it.
Yeah.
But I went on it like 3 days ago, and that's what I said. I said, you know, a lot of people were worried about this entire thing, and my take on it is just it's going to bring the people who are serious.
Yeah.
Because they rolled us back 2 years. They didn't roll us back to 1980. You know,
Yeah.
it was people were buying businesses just as fast and just as much in 2022 with these same regulations tied in.
Yeah.
But the people that were buying it were just more serious because they couldn't kick tires anymore.
Right, and they're in better positions. I mean, I think the people that got hurt the most, in my honest opinion, by the SBA rule changes, is likely Meta, right? Because there's a lot of Instagram advertisers that the snake oil is going back in the jar and the gurus are going away because you can't anymore, right? A lot of the stuff and for the record, you couldn't then with a lot of the stuff, right? But some of that stuff has been a little quieter too, Jack, because I'm sure you've seen them before too. It's like, you know, for the low price of X, I'll show you how to buy a business, and you know, in 30 days. You're on the beach and you're rich, you know, and there's some great accelerator programs, honestly, that I work with that I'm grateful, you know, to work with them. They actually prepare people, right, for this. There's a lot that don't, you know what I mean? And I was teasing about the Meta taking a dip, but those ads, I have noticed they've been kind of slowing down too. I mean, there's like a mad dash for it. And now I don't know if they're going to be real estate gurus again or what's next. But
it's big. They're going to go back to Bitcoin for the next cycle, and then real estate will pop again, and they'll figure it out.
The cycle
they'll grift
continues.
Somewhere else. Yeah, that's my favorite thing to watch is as somebody who was in early in Bitcoin was just watching all these gurus show up, disappear, show up, disappear, show up, and I'm going, man, don't talk to me. I know more than you.
But they show up in Lamborghinis, so there's that. Right?
They know more than me because they know how to rent Lamborghinis
because they can rent the Lamborghini. Exactly.
Much better.
Exactly.
I just can never do it, man. I'm too honest, but
I like it.
That's interesting. So I'm glad the market's still doing well.
Yeah, we're busy, man. Me and Kevin Bromberg have been really just pumping at a good clip. You know, really. I mean, it's not like it's not slowing down for us, and we're grateful for that, obviously, for a variety of reasons. The most important is we don't like being bored, right? So every day is an adventure, and every day I look up and it's, you know, 7-8 p.m. I'm like, all right, well, we're done here, right? You know what I mean, or whatever. Not every day, but you know, Wednesdays we generally that's our late day. But either way, I mean, it's a lot of fun what we're doing, and I'm seeing better. I think I'm seeing better buyers, but still, there's a lot of listings out there that don't make sense. So just my advice to anyone listening that's really kind of getting into this, remain objective, stick to your guns on what matters to you in the right business. And like you called out earlier, Jack, like, remember, you're going to love this guy, this seller, right? Of course, we just really get along. It just makes sense. That does not protect your assets in a bankruptcy. Okay. So just really, really, really just stick to your guns and make sure when you're reviewing, you're being objective. And when you're structuring, you're not, trying to make them happy just to take down a deal. And when I see that, I'll say it. Like, guys, you're getting a little desperate here. Like, why would you give them that much money?
Don't double the interest rate you're going to pay on the seller note.
Yeah, right. Yeah.
Things like that.
Things like that.
So this is not to finish off the episode with some downers, but I think it's a very important topic. But for people who maybe they don't typically understand kind of the backside of the SBA. So the SBA, yes, they are. You get a personal guarantee when you go into a 7A loan. So can you talk a little bit about what that looks like and the expectations behind the PG and what that covers usually? Mm-hmm. And I do have a question for you on the back end of that, because I'm someone who has one. Mm-hmm. I deal with it, and I'm curious.
Yeah.
So what is the PG?
So the personal guarantee, it's any partner 20% or more provides an unlimited personal guarantee. Also keep in mind that when we determine who's a full guarantor, if this, your spouse is 10% and you're 90%, your spouse has to provide a full guarantee. We combine that. Same with adult children if they're living at the same address. I don't see that as often. There's not a whole...
My wife was a PG on mine.
Yeah, and most times they are, because the reality, and let's bring up a better topic before we close, because I'd like to come back. But the reality is, in a worst case scenario, your spouse is tied to that deal no matter what, right? Because you're looking at joint assets, you're looking at all these things. If a loan is going bad, we have 3 covenants at our group, right? The 3 loan covenants that we have, and some banks have a lot more. Ours are just aligned with the SBA's expectations. One is, as long as your loan is on the books with us, you will give us updated tax returns as part of our portfolio. Okay? Everyone knows that. That's fine. The second one is the adverse notice, right? So think of it this way. What you're agreeing to is, if you see a storm coming, you're going to talk to me about it so I can help you grab the umbrella before it gets too nuts, right? If there's anything that we can do for you. And then the third and final covenant, which I think is the most egregious, honestly, is you have to make your payment every month, right? So,
I got you on that
these
one.
are pretty fair things, but the adverse notice thing is interesting, because now you're thinking, well, what kind of storm? Well, things happen. Whether it be mismanagement or misfortune. I mean, Jack, you know that better than anybody. Yeah, I'm familiar with your story, right? It's like things can get a little tricky, and you've got to be able to keep pushing. But there are options if things are starting to go rough, and you've got to let us know, or else we can't help.
And it goes a long way.
Yeah.
We have some buddies who ran into some of that.
Yeah.
Running much bigger companies than we have, and I won't say names.
Right.
But by utilizing the adverse notice, deferring some payments, was able to get the work with vendors, the whole 9. Was able to actually do a full turnaround midway through, save the company, and now is profitable and happy. Mm-hmm. But there was a point early on in their career where they did run into that and had to utilize kind of some of those tools that the SBA and the banks provide, because they don't. I mean, I don't want to speak for First Internet, because I'm not a part of First Internet, but from my belief is that most banks don't want you to default. They don't want to take your PG. They don't want any of that. Like they'd rather that you just pay the interest.
This is
the
like
loan,
real people. It's like real lives and real people. I'm not saying like we're giving out deferments like candy. That's why we got to buy a big business, a good business. It's one of these things where you need to find a real business, where there's a little bit, if you're spending real money, right, you got to make sure there's some stuff there, and you're not buying a roofing company with 1 year of 2 hurricanes in a row in Southwest Florida. I mean, it's just, you got to be objective, because this stuff is
new
real.
Construction. New
right,
construction. Any kind of construction.
New commercial construction.
Do you guys lend on construction?
We'll do them. Yeah, it depends on the metro though. So like if they're, and it's got to be like it's got to be some real experience. You know what I'm saying?
And it's got to be a really, really good deal.
I don't think I've done it. Wait, I'm sorry, Jack. Did you say did I look at them, or have I actually done them? Have
you actually
there's
done
two
a
different
new
answers.
Yeah, right.
So,
Yeah, fair enough.
yeah.
I mean, you probably have done some new construction, right? Because most large HVAC companies, they have 20% new construction, 50% new construction.
Well-
So, like, I'm not surprised that some level of new construction is in some deals, but 100% new construction, like, it's so hard to run SBA through just, and I don't even know from the banking side, but just from a debt side.
Yeah.
I mean, you have a downturn in the economy like we saw in 2022, and that we saw, there's scares. They're not even downturns in the economy. They're just economic scares where everybody gets freaked out for 3 months and then you can't pay.
You can't pay, and payroll is still due, by the way, right? Your net 90 is in net 120, and you got to pay your guys, or there's going to be, pitchforks and.
Well, that's the thing, though, is like even if you let off every single person and you didn't spend $1, you still have a giant loan that you have to pay, and now you have no houses to do. So it's not a feasible way to fund. I have a good buddy who funds multiple new constructions, does an amazing job. It's someone I highly, highly respect and refer everyone who wants to do new construction to. Adam Flam out of Utah. Has like 9 kids. He has to drive around in a giant bus.
Busy guy, man. Holy
Busy
smokes.
guy. But he does revenue shares on all of it. And it's like the best way to do those.
Yeah.
Not to take away from you and your business in the SBA, but just like generally.
We're not I'm glad you pointed out. There's always other options and opportunities. The SBA is not the right fit for every deal and every person. It's just not. I'm aware of that, right? But, with the new construction thing, Jack's like, what I run into, like, I'll have someone that's like, commercial new construction, and let's just say it's in a desirable metro, okay? That it's a reasonable assumption that they're going to continue, but the loan term is 10 years. So are we going to guarantee a decade?
They might have like 2 years of backlog, but to guarantee 10 is a lot.
Well, and then everyone says, yeah, but I'm going to build out the residential maintenance, repair, replacement. I'm like, okay, great. Like, how long have you been in HVAC? Oh no, not at all. Oh, never? You've never touched a thermostat, let alone a wrench? Oh, okay, so you're just okay. This is a good deal for you, all right? This is
for anyone listening. DM me if that is your idea of what you are going to do, so I can personally make fun of you, so you don't have to listen to Alan and I berate you live on this. And not because it's not possible, but just because I've heard it so many times, and it's so much more difficult than it sounds.
No, you just get service tightened, dude. It's easy.
You just get service tightened, and then just like the guys get slow when you pull them over, and it's like no, they're just it doesn't work like that.
Yeah.
Different people, different types of it's the same trade, but different sections of a trade. It's like saying, hey, you're a cook. You cooked at McDonald's. Now you go cook at this Michelin star restaurant.
Right.
Like, it doesn't transfer. It doesn't transfer.
Yeah.
But here's my question before we bring it back to something more fun is, so my real estate, because it's part of a personal guarantee, is PG'd with a wonderful banking system.
Yep.
But it's a rental.
Okay.
So it's my rental. I have more there's more equity in the rental than there is in my loan itself. But let's do this a different way. There's less equity in it than the loan itself, but I want to sell the rental because I'm tired of managing rentals. It's not what business I'm in. I'm in HVAC.
Right.
What does that look like? Like, what's the need from the bank? Is it a 1-to-1 match on a cash to equity? Because I would be under the assumption that the bank would make smart choices and be like, hey, cash is worth probably a decent amount more. Your debt is now lower than it was when you went under PG, so we could take a percentage of that away. Things like of that nature.
Yeah.
Like, what does that look like?
So my understanding, and experience.
I know you're not an underwriter either, so.
Yeah, I could ask Mike Cass. I don't know if he's here, but he handles all of our like post-close stuff, and some of it, and him and Marcy, they're both here, right? But they would probably answer this better. But in my experience, that's up to the bank, okay? Because what we can do is we can trade it for collateral in kind. If in the example you used, you're getting out and you're not replacing it because you're an HVAC. You're not. That's the business you're in. So if you're gonna truly just get rid of the rental and you're not gonna replace it with collateral in kind, then the sale of the liquidation would go to satisfy the lien, which would come off the principal of the outstanding loan, right? So that's a challenge that I've run into before, where they're like, hey, I don't want the sale of this property to go towards the loan. I'm just happy with the way things are, but I don't have another property lined up. So if that's the case, that's challenging. But we see it more often, Jack, with primary residences. Like if someone is, they close an SBA loan, and in 3 years, miraculously they can buy a bigger home, because things went well, right? And running out of bedrooms,
Good for them.
Good for them. It's good to, but then what they'll do is simply they sell the current house, and then they just tack the lien on the new house, and that's really it. And the only place that you don't have to worry about that is primary residences in Texas. So if you're the primary
the castle law,
the great state of Texas does not allow us to put liens on the property. So on the primary only investment use, so they can. But little interesting fact for you there.
Yeah, fun fact, I run my business out of Texas in Tennessee.
Yeah.
That's my primary residence.
Yeah.
No, but so, that's interesting, because that's what I imagine. I just, there's always so much, and it sounds like it would be a bank-to-bank situation where
right?
you could walk them through.
Maybe they can say too, like, hey, like we'll use some of this to pay down, and then the rest we'll put over here. I know there's just such a unique situation around the board. I had a customer that client like 3 years ago, and they had a rental, and they asked, hey, instead, why don't you just let me use this for working capital, because I need that anyway. It was post-close. They're looking to grow. I mean, everything was legit. The business was performing just fine, but their play was, can we take the proceeds of the sale, and the bank will hold them in escrow and allow the business, not the individual, the business, to draw from that as needed. I was unable to do that. And what we did was they paid down, the proceeds went to pay down the outstanding principal, and then we gave them a new line of credit. I mean, that was almost cleaner and easier, believe it or not. They got the same outcome, but rather than all that extra steps, the escrow agreement, all this other stuff, we just underwrote it and gave them a line of credit. So
more so the curiosity too. Like, and the troublesome for me comes in, like, it's a rental. Yeah. And there's things that large capital expenditures that need to happen on rentals. Mm-hmm. Well, you have two options now. One is you're paying from personal pocket to try and put a new roof on for $30K. But normally, right, if you didn't have that lien, you could go to the bank and say, hey, I would like to pull out a HELOC. Mm-hmm. And then use that capital against and da-da-da-da. So, like, there's always some interesting things around the way that the collateralization and the placement of the lien works on that. So I'm always trying to figure out ways to get out of it so that I can actually utilize that line of credit for A, business purposes, and B, but I get it. Like, they need to cover, and so at some point in the near future, I mean, it would be nice to try and figure out a way to remove that. Yeah. Even if it's just like even if the business is able to come up with a cash equivalency, so of whatever the PG is, and then put that away. Mm-hmm. And like if I've been in the business for 4 years, if I've been able to put away $2,000 a month times 48, and that was the outstanding principal or whatever, like could you then swap those as collateral purposes, put in escrow, and then just pull? But maybe conversation for a different time. We're going to get too granular here. Yeah,
and I'll have to talk to my guys first so I can give you a good answer. I'm glad you pulled away, because I had nothing. For once, I was quiet, Jack. You can imagine a stare that I'm speechless. That either I'm eating or I don't know the answer.
Right. That's funny. So what was the topic to end us out on here today?
I would just say a good topic. Man, that's your call. Tell me about what's going on right now. What are you're evaluating different opportunities. Are you actively looking, or are you just seeing if something falls that just sort of makes sense? If you don't mind me asking on your podcast about this, I mean,
ask me questions. Yeah, Alan. Yeah. No, we're always actively looking. That's why I'm one of my favorite things in the entire world is, besides out in business, not for my family and kids. No, forget about that. That's its own special category. But in business, I really, really enjoy acquisitions and structuring, hence the start of this channel. And so a lot of my time is circling back with brokers and maintaining relationships, talking to them about deals that, like you said, hey, This guy wants a 1.2 million for his 200,000 in EBITDA business. It's like, hey, it's never going to happen. But I'll still come and say, hey, I know you probably haven't sold that yet. You know you're not going to sell that.
Yeah.
When's he going to get realistic? Because I'm interested.
Right.
And so I have those conversations probably once every week with a different broker where we circle back on deals that just aren't closing for obvious reasons. You can find them in the pages of Biz by Now that have been there for 6 months, 8 months, and you're like, hey, what's going on with this?
Yeah.
I'll do some time prospecting with some old open channels that I have with off-market deals. A lot of them are the same thing. They just don't have a broker. So I'll call them and say, hey, buddy, you down the street. I mean, much like yourself, you get along with all the other players in the SBA game.
Yeah.
HVAC, plumbing, electrical, I can't speak for any of the other trades. I would assume it's the same for roofing, fencing.
Yeah.
We all know each other.
Right.
We all know each other.
Right.
We all have the rumor mill.
Yeah.
We're all talking to each other. And so there's no, talking to someone about potentially selling if they're interested. How's your back doing? Johnny, I know you're 56 and you're running that $2 million shop down there.
Yeah.
And your son just quit.
Yeah.
Like, are you okay? You need help?
Yeah.
Are you ready to exit? Like, what's the next step for you, man? Not from like a predatory standpoint, but just from a, hey, like truly you are a friend in the industry. What's going on? Do you need help?
Yeah.
And a lot of times that's where we get some leads from. It's just like, hey, no, I got my cousin came down and his hand helping me.
Yeah.
But we are always looking. We're not under IOI, but we've submitted IOI on a deal. We have another deal that's off market, but it is very, very, very messy.
Yeah.
I love it. And we've been talking to this individual for like 3 years. But it is so extremely messy that we have trouble coming back to it every time. And eventually we will buy this company. It's just when and
how.
How.
Yeah. No, that's cool. And I was actually kind of ask that to kind of set up some good news for anyone that's in here. I might have touched on it last time, but I'll touch on it again. One, if you don't own a business yet, you're looking to buy one, get the pre-qualification, right? Let me plug that. AlanFIB.com. Get
AlanFIB.com.
Yeah, hop on. And I'd love to talk with you, even if you're not really ready to, if you're not positive this is for you, I still want to talk to you. If you think it's for you and you're not sure, I want to talk to you. And if you're ready to go, I certainly want to talk to you. And some good news for the operators here, the current folks that own businesses that are looking to expand, right? Don't forget that through the SBA program, when you are buying a competitor or commercial real estate, you have the ability to do it zero down. Do not forget that. People never, it's like I invented like fire or something, right? When I tell people that, they're like, what? And and as long as the cash flow supports the project, you can take down the business, you can get a line of credit, you can do any of the above and address needs of the existing business all in one loan with nothing out of pocket. So, that's the compelling part about SBA. I just want to remind folks of that, that if you're already in the game and you're looking to grow in the game and your main concern is how do we take this down, give me a shout any way you would like, and I'd love to look at some options or just tell you exactly what to look for. And I do it all the time, but that would be a high note of the.
No, that's amazing to bring that up because a lot of people forget it.
Always.
I don't think too many people on here forget it because that's the generational wealth portion of building with the SBA 7A loan. That's the way that you can buy at. So I'm a great example. I'm very open. We bought at a $600,000 price point for a $800,000 business. Some bank cleared me on that somewhere, Alan. Believe it or not. I know it's wild now. But we've grown that leaps and bounds to make a name for ourselves in the industry, up to about 5-6 million. And now we're able to go back and buy other businesses that are 2, 3, 4 million and continue that growth. We buy them at 1 or 2 million, but it's a 5 million now, and they're thinking about expanding it. Alan, is that correct?
Yeah, that's per
So you can have up to a $5 million loan with the SBA.
Yeah,
I mean, a $5 million company, maybe you buy small medium the first time, show that you're a winner, show that you're a good operator, and then when you go back to utilize the rest of that loan, if I want to go back and utilize the other $4.4 million, a $4.4 million is business is, I don't know, in top line, it's probably doing, oh goodness, quick math, Alan, quick math.
I need Excel.
I was gonna say neither of us are good at this.
Where's Kevin?
If it's a 4x multiple at 4.4 million, that's the easy way to do it.
Yeah.
That means that it's a 1.1 million in EBITDA company.
Yes.
Which means it's probably doing about 10 million at 10%. So I could go and buy a $10 million company at 0% down. To add with my company in theory, if everything is good enough, and then boom, now you're able to grow a massive
and
business.
you're still only out of pocket for that first deal. It's crazy.
And you're still only
it's
out of
crazy.
pocket that
I love
60K,
that.
90K.
It's not the right deal. It's not the right program for every situation, but I'll tell you what, if you can find better leverage out there, I'm definitely interested in learning more. You know what I mean? Because like from what you just explained, that gets lost on some folks. So I would just like to kind of remind that for the folks in the game. And again, if you're looking to buy, I deal with a lot of first-time buyers. It's kind of what I've been able to kind of niche down and do a lot of home services, but that's not all I do. So even if you're interested, I do a lot of manufacturing, of course, as well. But anything that we can look at, we're excited to. And I'm just grateful, to be back here with you, Jack. You know what I mean?
Yeah, no, it's fun. And last question to close us out. Do you, and this is personal,
that's
more important to be in the game or more important that you get the first perfect deal? There you go. This is a hard one.
I don't know if my credit manager listens to this one. I'm sure he does. Get in the game, man. Get in the game. If you listen, it depends on who you are. Okay. So if you really have been in there, like if you really know what you're doing, you've been in the space, you're in the industry. If that's what you're saying, then I wouldn't be as picky. But if you really are truly new to something, I would be much more cautious. Now, Jack, you're interesting.
That's what I try to teach people is like, hey, you can mitigate a lot of things with price and with due diligence.
Yes.
But sometimes it's every deal, especially in the lower ranks of like 1 million, 2 million, they're going to have hair. They're going to have lots of hair. And so sometimes, as long as you're pricing correctly, even if you miss a little bit on price, it's more important to get in the game than it is to sit on the sidelines for the next 4 years waiting for that perfect deal to come along. So I'm not saying buy wrong because I bought wrong.
Yeah.
I'm saying that I had 3 more opportunities to purchase 3 more additional businesses on the back end because I was in the game and they all came through industry connections versus not being in the game at all and waiting for the perfect deal.
Yeah, no, that 1,000%. Because the folks I know that only kiss supermodels, they don't go out on Friday nights. Man, I just made that up. That was good. I still got it, Jack. I might be less animated on this one, but I still got it.
Oh my God. I'm stumped. I don't know what to say to that, but I'm going to take you up on your word. I've never kissed a supermodel, so. I also don't go out on Friday nights either with 3 kids. One half of the other.
Young kids.
I like that we brought it back to a point where we ended on a good note, not PGs and fun stuff like that. So, hey guys, if you like what you heard, Alan, we talked about it. They can find you over at alanfib.com, alanfib.com. Where else can they find you or get any information from you?
Yeah, I think last time we talked, I said how I was going to start getting back into short form content for social media. I'm still been too busy. Haven't done that, but it's a little aged. But just my name, Alan Peterson, SBA. That's on every social platform. You can find me there. Trying to get back into that more to get the word out. So I'm really grateful, Jack, honestly, to be able to sit down and talk with you for a little while. And, your crowd is awesome, right? Your listening group are really, really very interesting, smart people that are, when they ask me questions, they're good questions, right? And I think that's something that I really appreciate doing that. But find me on alanpetersonsba.com. Or no, that's social media. AlanFIB.com is the website. That's where you want to go. You can get on my calendar there. You can
Schedule a meeting.
Yeah,
with them.
schedule a meeting, figure out what you want to do, Zoom or phone. Doesn't matter to me. I can, always just kind of be accommodating as I need to be and meet you where you're at, regardless of where you are. I have a solution, and we've done a ton of deals. I'm really grateful for it. We're going to keep it moving, and we're doing it the right way. We got your back. You're not going to do a bad deal because I'm not going to let you. You know what I mean? Oh, you can
That's
do a bad
huge.
deal, but maybe with another bank. I'm not going to sponsor it.
At least you'd say something.
Yeah.
Awesome. So guys, like, subscribe, follow. We're building the channel. It means a lot. Every bit of engagement goes a long way. Share it with your mom. Let her know why you're doing this crazy idea. Say, hey, we're trying to be like these goofy guys over here. And we appreciate y'all. And good luck.